I mean, things are changing in terms of the ecosystem and the partnerships that these companies had. Remember, Nvidia planned to spend almost $100 billion with OpenAI at one point. So they scaled that back to $30 billion in their latest funding round. Well, guess what? They are investing a lot more in Neoclouds, whether it's CoreWeave or Nebius now. Basically, from an Nvidia standpoint, they want more fragmentation. They don't want that cloud world to be limited to 3 hyperscalers. They want as much fragmentation as they can for their chips. And really, in this case, in Nebius' case, they want to build an end-to-end Nvidia stack that Nebius is hosting, and they are getting clients to use Nvidia throughout, whether it's training, inferencing, and really optimize the performance to the Nvidia stack. Because in the end, 5 years down the line, the supply demand equation would be very different. Right now, everyone is supply constrained, but they're thinking 5-10 years ahead when chips could again become a commodity. And they don't want that to happen. They want this to be more fragmented.
Does this deal, this $2 billion investment, put Nebius on the map? I mean, is this a game changer for that Neocloud company?
Absolutely. Right now, it is all about raising the funds, which we heard from Oracle last night. They're not going to the bond market anymore, and that's why you saw a positive reaction. So the market is very sensitive about raising more debt to finance the infrastructure build out, and that's why Oracle saw such a big pushback. I'm sure it's the same for CoreWeave as well. And so if Nebius is getting $2 billion from Nvidia, and you can say it's circular financing to buy Nvidia chips, but it alleviates that need to go to the bond market to raise the $2 billion. And so from that perspective, it does solve that problem that, they don't have to raise money right away.
I mean, they're only one of 2 Neocloud companies anyone's ever heard of, right? No one knows.
CoreWeave.
Yeah, beyond CoreWeave and Nebius, what is there?
There are
a ton, I'm sure. I'm just, and Mandeep, you probably know them all, but me and Scarlett, we only know CoreWeave. And then, and that's number 1. And Nebius is the also ran, right? With, by the way, weighted average cost of capital at Nebius, 20%.
There you go.
So yes, they don't want to have to go out and raise money. They'd rather have a chip maker give them money to buy that chip maker's chips.
Yes, that's what they call circular financing, and that's what has some people concerned.
I mean, why doesn't Nvidia just be its own Neocloud company?
They are. They do have a DGX cloud offering, but look, in this case, Nvidia has new architectures every 12 months. They have already announced their Rubin architecture. So what they want is these Neoclouds to have those new chips first, as opposed to an Amazon or a Microsoft. And that serves them well because these Neoclouds will end up signing up customers, which will be long-term customers. And that I think it's great for NVIDIA to have that fragmentation.
I'm going to throw an audible here if you don't mind, because we were going to talk about Uber Zooks, but I mean,
it doesn't matter in the context of NVIDIA.
I mean, they're cool looking little things, but I don't care. What I care more about is this chip battle, right? We knew NVIDIA completely and totally dominated, still does, I'm guessing.
It does.
But Google has a chip that's like a contender. Amazon has Trainium. And I thought that Meta had just not joined the party. But now they just showed up, right? That's breaking news this morning at 10 o'clock. What's Meta deploying?
And look, that's the big risk for an NVIDIA is all these hyperscalers don't want to spend, $30-40 billion a year on buying NVIDIA chips. So that's where they will continuously try and develop their own chips. Now, Meta is way behind a Google TPU. Google TPU is still, deployed. They have 7 versions of their chips. Meta is still in the initial stages of building. But with the scale that Meta has, that means down the line, it will be less of a purchase for NVIDIA. And that's the risk that NVIDIA wants to avoid here.